Having analyzed the income side, let us look at the expense side of a P&L statement. What all is there in expense side? If we look here, this person has household expenses of 5,000. He is spending 2,000 on education, 3,000 on utilities. Utilities would include your telephone bill, your electricity bill, water, maintenance, insurance, upkeep, etc. So totaling to 10,000 rupees. So what we learn from his expenses is that his expense, 1/3 of his entire salary is going towards his household expenses. Another 1/3 is contributed towards education and utility payments. What is left over here is his net income. That means his total income of 16,000 minus total expense of 10,000 leaves him with 6,000 rupees. Post which he has an EMI. If we go to his balance sheet, which we'll see in the next video, how he has taken a house for which he has taken a housing loan, which is resulting into an EMI of 3,000 rupees a month. Also, there is a bit of personal loan involved. So we have 3,000 as his EMI. So 6,000 less 3,000 EMI gives him a net saving of 3,000 rupees. Now you will say that though you can also read, I can also read. So what is the learning out of it? The very important learning that we get out of reading of P&L statement of an individual is look at his net savings. His net savings, which is 3,000 rupees, is 20% of his main source of income. The learning here is, are you able to save 20% of your take home every month? Think about it. Second key learning which we get out of this income statement is that he is well within the limits of his income. That means his total expenses are 2/3 of his income, and he has 1/3 of money left for servicing his EMIs. And the most important learning that comes out of analysis of P&L is that he has some savings left for himself and his family even after paying the EMI. That means whenever you plan to do a big purchase which involves taking a loan for which you plan to pay it in EMI, the first thing that you need to check is whether the EMI is affordable to you or not. Unless you check the EMI affordability, it is very difficult for you to finance your capital purchases like house or car or interior or big TV or a big mobile phone within your given income limits. Let's take an example. What happens when you plan to buy a house? What's the first thing that you do? Of course, you look for a house. What happens when you start looking for a house? You make a list of builders or estate agents whom you know who can help you find one. After they make a list, every weekend or whenever you find time from your work, you go and visit those houses. After visiting like 7-8 houses, you shortlist a couple of them. Then what do? Then you call your family to have a look at those 2 houses. And you know how typically the family members are. The moment they start looking at a house, they would say, we would put the TV here, the furniture will be here, we'll keep the kitchen like this, the bedroom would be designed like this, so on and so forth. So friends, after all this is done, they would shortlist one house. What happens after that? After that, you sit on the table to do the numbers. And who all are there with you on the table? Of course, the regular guys. There's an estate agent, there is a builder, there's a banker. Now, after doing all the numbers, you realize that the house that you're planning to buy is just short by 5,000 rupees a month in terms of your EMI affordability. what would you do? Would you go for it? Or would you reject? Think for a minute. Okay, so you will take advice. Perfect. Whom will you take advice from? Of course, whoever is there on the table, right? So you ask the real estate agent. What will the estate agent tell you? Boss, you don't buy house every day. You just buy it once or twice in your life. Don't look at small figures. If you want a house, go for a good one. That's what he will say. You look at the builder. What will the builder tell you? The builder say, boss, every game in life cannot be safe. You have to take calculated risks, no? I have become a builder only by taking calculated risks. Otherwise, do you think I would have reached at this stage in my life? If you look at the banker would say, don't worry about the EMIs. I would top up the loan and ensure that I can stretch it for 5 more years. Of course he would. It means more business to him. So what is the bottom line? Would you still go for it? How many of you are still saying no? Remember what your family will say if you back out at this stage? Oh, we know about you. You're just a man of big words. I am sure you would go for it. But tell me, is this the most rational decision that you took? What are you thinking? The next appraisal, which will increase your salary? Or some other source of income? Living with 5,000 rupees extra burden per month for next 20 years and hoping that your pay rise will suffice you to pay your EMIs and with zero savings. I leave it to you. My message is very simple. Before you consider buying a house or any big capital asset, please do your maths. Income minus expense would give you net income. And net income minus compulsory savings, which if you remember is 20% of your main source of income, is your EMI affordability. If you cannot afford it, please don't buy it. There is no point in having sleepless nights in the new house, which was supposed to be your dream house, because you would not have dreams, just nightmares after all. There are things in your control and there are things which are not in your control. To take financial control of your life, don't forget to subscribe Finance Tube. That is the first step towards wealth creation and financial freedom. Subscribe to Finance Tube. In earlier days, there were share certificates which used to come to you. Now, all these share certificates are dematerialized. And the short form for dematerialized shares, or to hold the place for these dematerialized shares, is called demat account.